it's kind of like game theory. So the U.S. goes into a recession, it'll drag the rest of the world down, and then other countries will react in their own best interests. And there's a lot of turmoil right now in regards to the Ukraine war, NATO, the Europe alliances. There's a lot of moving pieces. The U.S., quite frankly, because we're the consumer of last resort, has a lot of, and the U.S. and we are the reserve currency, we have a lot of leverage against some of these trading partners. And some of them, and that's why Trump is going to use tariffs as a means to bring people to the table to renegotiate deals.
Yeah, and I guess then you get, maybe before I go there, so it sounds like you don't think the US is going to experience inflation. It's going to sort of be more maybe not deflation, but a lower inflation environment with bonds. Yields coming down.
So if we're correct, there'll be a period of disinflation, maybe a brief deflation scare, but what's going to happen, and we suspect it will happen, and we talk about it in our report. We basically say we don't know what the policy response is going to be. So when we see the policy response, what will it be? Will it be more massive QE from central banks like the Federal Reserve? Will it be yield curve control? Will it be fiscal stimulus? So we'll have to see. So we suspect, bankers, it's inflate or die. Deflation and disinflation, unless it's slow and steady, they don't like it. So we suspect after we see the policy response, which will come, it'll be late, but it will come. We suspect it'll be another round of inflation. So we're kind of in this disinflation, deflation, inflation roller coaster where you need to constantly create credit, but then eventually you got to then stop the credit flow because inflation's running too hot, and then rinse repeat. It's a cycle. It's a cycle of stagflation. We think. Again, we don't know until we see the policy response. But what we're pretty confident in is that we're going to get slower GDP growth, risk-off selling in risky assets, and a flight to safety like government bonds, the U.S. government bonds.
Yeah, and that helps because there's lots of debt sort of rolling off this year as well. So if it's a lot harder a lot of that was refinanced during COVID. It was sort of very low rates. So then now if you have interest rates coming down, that could potentially benefit the refinancing of this economy for another 5 years.
So we're going to see some bank failures as long as it doesn't turn into a panic. I think we get through this, and we need a cleansing. The question is this the big one, the end of the everything bubble? And again, I can't call that, but there's a lot of risk right now.